Hello, everyone. Good evening and good afternoon, depending upon where you are in the country. I'm excited to be moderating this very exciting panel today with some of the most accomplished Hoyas in the investment space, focusing on the media and entertainment industry. I have actually had the fortune to work with several of the people here because I work in the capacity as a consultant. I'm a partner at Altman Solon, and we oftentimes work with investors looking at this space. So I'm really excited to be talking to all four of them today and getting their perspectives on the current landscape and their thoughts about where things are going. So without much ado, I would love for each one of the panelists to introduce themselves with your name, your Georgetown school and year, and your current position, and the most exciting investment you have made in the last 12 months. So I'm going to start with how I see people on my screen. So Rick, you're up first.
Sure. Thanks, Marianne. I appreciate it. So my name is Rick Heitzmann. I'm Georgetown Business School, so BSBA 94, and a proud Hoya, and continue to love to be involved and hope against hope for the basketball team over the last several years. But just remembering what Marianne said, so I was a Hoya. I then went and was an entrepreneur for a number of years in the tech space, and about 17 years ago co-founded FirstMark Capital, where we're early stage venture investors. We focus kind of the application layer of the internet and media and commerce companies on the consumer side with names like DraftKings, Pinterest, Airbnb, as well as on the enterprise side with some SaaS companies like Shopify and Envision and Frame. And one of the areas that we're deeply involved in is video games, and we've done a number of video games investments over time. A recent company that I've been excited about is called Pixel GG, which is working globally to help people do play to earn within video games. So if you're familiar with things like Axis Infinity, where there's a fair number of international players who are, as a full-time job, playing to earn within the game system, either an Axis or other token-defined games. They're an organizing principle and almost an Upwork for the virtual world. So it's growing very quickly, although a completely new metaverse experience, but we're very excited about it.
And are you playing to earn as well in this metaverse, Rick?
In the physical world, I feel like I do it every day, but in the play to earn, I try to do it as much as possible. It's super fun. I play video games with all my kids. It's an interesting thing we share together.
That's great. That's great. And can we all be playing Pixel GG right now?
You can. I think you can. You can jump in and you can be a Pixel GG scholar, where we could lend you Axie or other tokens or virtual currencies, so you could grind it out and build virtual houses or boats or earn other types of currencies leveraging the platform.
Okay. I'll definitely be looking into it. So next up on my screen here is Laura Held. Laura?
Sure. Hi, everybody. My name is Laura Held. I was Georgetown undergraduate business school class of 2004. Big Georgetown fan. My husband, my three sisters, my brother-in-law, everybody went there as well. So huge fan of Georgetown, and great to be here with you guys today. I'm a partner at Shamrock Capital. We're a private equity firm based in LA. We do later stage growth and more traditional kind of middle market buyout investing in the media, entertainment, and communication space. We were actually started a little over 40 years ago as part of the Roy Disney family office. So Roy was the nephew of Walt Disney and had set up a family office to manage and diversify the family wealth. And we've since evolved into more of a traditional private equity firm in terms of the diversified LP base and approach, but very much with that heritage and history and why we have that sector focus. In terms of an investment that I would call out, it's always hard to pick. I feel like it's hard. It's like a child. You can't pick your favorite child, but I will pick the most recent investment that we have done, which is one that I am excited about. It's a company called EDO. What they do is they are a software business around data and measurement in the industry. And as many of you have probably seen, there's a lot of change and transformation happening in the TV industry right now. Driven by, as many of you probably see in your own in your family's consumer behavior changes in terms of how you consume content with the rise of streaming and over-the-top services, there's a lot of different ways that you can consume content, and TV advertising has traditionally been more of a channel that's used by marketers and advertisers to really drive, big brand awareness campaigns. And what you're seeing now is this really great opportunity to start taking data and technology from digital to a channel that was more traditionally very what we would call top of the funnel or brand building. And EDO is one of those companies that is really taking data and technology and helping advertisers understand not just what ad is airing, but what behavior and outcomes are resulting from those TV ads. And so we're really excited about it, given all of the change that's happening in the industry. And we think it's a fantastic product and team. So that's just one example. We're very growth oriented as investors, and we tend to look for what are sort of those big growth changes and trends that are happening in the industry. And certainly everything that's happening in the TV industry is one of them. So great to be here with you guys today.
And I would expect EDO to be getting some coverage in the upcoming upfronts.
That's right. They did. Right before we announced our announcement in terms of an investment with the business, they had just announced a partnership with Discovery, and the upfront process, which is obviously a really big part of how traditionally TV advertising has been bought and sold, is still very relevant in the TV industry. And they are one way that these media companies are trying to think about how do you really connect the performance of the advertising that they're offering. And so that is an exciting area. We're very excited that they're going to be part of that.
Okay, so for those of you who work in that part of the industry or on the call today, I'm sure a lot about EDO and the ad age and ad week as we hit the upfronts coming up.
That's right.
Yeah, Ted Oberwager.
Thanks, Marianne. Hey, everybody, Ted Oberwager. Georgetown, class of '06, college. I was a classics and philosophy major, so not the typical path to media, entertainment, or the investment business, but found my way to my true passion. Today, I'm a partner at
Twitter was invented in the ancient arenas, so it does all start back with live entertainment, and it's now through technology through the years.
There
so
you go. Exactly. Exactly. But today, I'm at KKR, a partner there. We're a manager of about $500 billion in assets, so it's a global, diversified alternative investment manager. I focus on sports, entertainment, games, media, consumer internet, and lead that practice out of the US, investing out of a couple different funds for us. We have a long dated fund that can own things for 10, 20 plus years. We have a flagship buyout fund, and we have a middle market fund. And so, my responsibilities sit across those businesses. And, I think across those areas, we tend to gravitate towards places where there's opportunity that's created by some sort of disruption from technology, which either creates a new opportunity or a mispricing in some way, shape, or form. And so the most recent investment we've made is in a company called Play On Sports, which is really the easiest way to think about it is Netflix for high school sports. And this company, really couldn't have existed in its current form 5 years ago even. The way that they go about their business is they actually work with a Shamrock company called Pixelot, which is automated capture. So they install cameras into high school gyms and football stadiums, and those cameras are able to automatically capture, broadcast, and then over time create post-production, automated highlights, things like that for a really modern feel for a direct-to-consumer streaming platform that historically you couldn't do cost effectively because it didn't make sense to roll trucks or bring a big broadcast crew to film a high school game where there's maybe 100 people. But they can do it at scale. They'll probably do about 1 million events this year, so real scale, and broadcast that to 1.5 million subscribers or so. And, we're really excited about it. And I think it's a great example of how fast the world's changing and, new opportunities that previously could never have existed.
And where do people typically wind up streaming the sporting events that they help facilitate?
Every platform, web, mobile web, iOS, Android, connected TV. They're really everywhere, just like Netflix would be.
Okay, because I have several, I have a niece and nephew who play high school sports, and also I have two in college playing Division I lacrosse, but I'm often being sent links by my sister. So I'm wondering if, at least on the high school side, their games are being covered by your company.
Yeah. Well, they power the NFHS network. So if there's anybody who's a subscriber out there, thank you.
Okay, wonderful. Shamin, Walsh, great to meet you.
You too. Thanks for having me.
Yes.
Well, as you said, I'm Shamin Walsh. I am Georgetown SFS undergrad, 2007. I really credit Georgetown for where I am today because the very first investment I made out of Georgetown was in Sweetgreen. And so I probably would not even be here if not for Georgetown. So go Hoyas. But I am a managing director at a pre-seed and seed consumer-focused fund called BAM Ventures out of Los Angeles. We invest in consumer brands, consumer tech, and B2B commerce technology. One of the investments I'm really excited about right now is called Unblocked. And they basically enable NFT applications for musicians and artists off of the Flow platform. It's an incredible team out of TikTok and Blockfolio, and I think what's exciting about it for us is, you know, there's a ton of talk about NFTs and also like controversy around like whether NFTs have intrinsic value in itself, but they have really unlocked longer term, you know, signaling and IP value. Whether it's, you know, as you think about like the music industry or media industry getting crunched in a lot of different ways, like having like perpetual licensing royalties or having the ability to engage with your fans and like, you know, gaining access to a certain collective or a community by, you know, through a particular collection. And we're pretty excited about, you know, the ways that it's unlocking like new monetization channels and like new ways of engagement for like musicians and artists with their fans.
That's great. And how are you getting the artists to sign up? I would assume you're probably working closely with a number of the managers and agents.
Yeah, I mean,
or how are the people running the company? I know you're not doing it.
Yeah, a lot of the artists have been funneled through early investors. So Marcy Venture Partners, Jay-Z's fund is an investor, so a lot of artists coming through that. Oak Tree Capital, which is a large investor in Primary Wave, which has a large artist catalog, is coming from that. So the demand from the artists was really what was being built around to begin with. So it was less about like trying to sell them on and like really building a solution to solve their pain point. So I think they have enough early interest and early folks on board where, you know, as it continues to build out, I think if it continues to work, then that the supply side will kind of solve itself.
Okay, wow, that sounds really exciting. Well, everybody is investing in really interesting things. So now what I'd like to do, you all come from different perspectives, at least when we look at the capital structure. We go from early stages with Shamin to a little bit more advanced with Rick, and definitely more advanced with both Laura and Ted in terms of the businesses that they're looking at. Although Ted, the business you just invested in is probably in a business, or even both you and Laura, are businesses that potentially could have been ones that Shamin and Rick could have been investing in only 5 years ago. Just that's how quickly our business is changing and evolving.
For sure.
Mm-hmm. But Shamin, I'm going to start off with you. Leveraging your individual investment lens, what are the best opportunities for investing in the media and entertainment industry presently? And it would be great to hear some examples of things, maybe not things that you've done, but things that your firm has done.
Yeah, I mean, I think as a pre-seed investor, which is like our sweet spot, media is generally a tough category if it's a pure content play, because we don't necessarily have the crystal ball in terms of how consumers are going to respond to a particular piece of content or what piece of content will have longevity. I think there are certain media companies that are really hits-driven businesses and become like really lucrative opportunities, but it's just so hard for us to predict at the pre-seed. So what we really focus on are around like innovative content distribution platforms, or like some kind of competitive edge, we think, around securing content and getting the content in front of the consumer, and less about like the emphasis on what the content itself is. So, you know, we were, you know, very early investors in a gaming company called Scopely, and, you know, one of the big drivers for us was that there was this vision around IP licensing and development that they had secured, you know, early on. Whereas I wasn't making a determination over whether this particular game would be a hit, but whether they had the distribution advantage and the licensing advantage to acquire, you know, rights to multiple pieces of content to make like a holistic determination as to like whether this platform will take off or not.
Interesting. And are you focusing on other types of solutions along those lines right now? Or do you see more opportunities in that vein?
Yeah, I mean, one of the opportunities, like we made this investment several years ago, but again, thinking about white space. So in the podcasting space at the time we made the investment, we thought there was a white space in terms of distribution and reach to the consumer, so which is why we invested in Wondery.
Just so you know, Hernan Lopez worked for me many years ago at Fox, and yeah, so
it all
yeah,
comes full circle.
Hernan was the founder and CEO of Wondery. Yeah, he's a fantastic person.
Yeah, he's incredible, and he's an incredible executor. I think right now, you know, as many investors are, we are looking at content distribution in Web3 and looking at some of those applications, which is why I mentioned Unblocked. And then something that we have not yet made an investment in, but we keep an eye on, is around live shopping. I think we've always had our eye on the Taobaos of the world for many years, and I think there's a lot of players tackling it now, but I don't know if there's been a winner per se quite yet. And so that's something I have my eye on, and I think there's opportunity around.
Terrific. Thank you. Rick, I'm gonna move up the capital structure.
Okay. Same question, I assume?
Yeah, same question for each of you.
Yeah, so I think, you know, there's great opportunities still in video games. I know we're going to talk about changing demographics in media and consumption patterns. But if you just look at, you know, time spent, one of the oldest metrics in media, that time spent, especially by younger demographics in video games, continues to increase. You know, that's happening cross-platform of PCs, traditional consoles, as well as iPads and mobile platforms, and that, you know, those play patterns are becoming increasingly social with cross-platform play, and, you know, those customers are being monetized in a bunch of different ways. If you think about subscription, ad-based, and item-based economies, so there's both, and we've invested in studios or platforms like Riot Games, which produces League of Legends, or Proletariat Games on the infrastructure side, with companies like Discord, which provides communication, or, you know, Playnomics, which we sold to Unity, which provides a CRM or player management. And we think all of those pieces are going to be rethought about as you think about, you know, a form of media which is being created, distributed, and monetized in entirely different ways than what you've seen historically in linear media. So, you know, whether that's playing to earn and being able to grind for virtual currency and being able to monetize that virtual currency, as we talked about in PlayGG. We're investors in a company called Playbyte, which is a little bit like ByteDance or TikTok meets Roblox, where you're creating and playing with your friends social games, very short form social games. So all those things are being thrown up for grabs. Obviously, we like when there is some element of a disruptive transition. So the movement from games from traditional PC to consoles, and then obviously the great unlock of moving them from wireline consoles and PCs to wireless tablets and phones, you know, creates a huge opportunity. The opportunity for commerce within games created a whole new monetization stream beyond just shiny discs. So, you know, those are some things we're looking at on that side. And then on the distribution side, for a little something differently, obviously traditional distribution or even new distribution is becoming less effective. I think everybody probably sees that, you know, traditional paid advertising with the large players like Google and Facebook is becoming less effective for a bunch of different privacy or even saturation related reasons. So we're thinking about new community-driven or curated distribution. Do you have to own your own communities to have a broader footprint of customer acquisition and influence? Clearly, the influencer channels and how you could prop up or share or monetize media through those. So, anything that kind of things that are new or any kind of disruption that's happening across the whole media and entertainment landscape is super interesting to us.
So concepts like Web3 probably matter significantly for you in terms of thinking about, in terms of the lens you're looking at things through.
They do, because Web3 probably enables a lot of creators. So if you think about, probably two ways that, or a couple different ways that Web3 enables creators to then have a kind of a continued economic stake or a general stake in what they create. Enables, the blockchain infrastructure enables things to be tracked for future monetization. You enable, the creation of communities through DAOs. So, I think, Web3 is disrupting a lot of industries, even outside of media, like fintech. But I think that those disruptions, especially with something that's as material as Web3, is going to create a lot of opportunities for everybody on this call.
I know this is not a question I posed to you, but I am sure that a number of people on this call may not fully know what Web3 really means. So maybe if you could just give a simple overview of how people should be thinking about Web3 versus Web 1 and Web 2.0.
So everybody probably, there's about 8 billion people in the world. There's probably 8 different opinions on what Web3 really means. But to oversimplify it, Web 1 was kind of a single player mode where people were creating and publishing. Web 2 was much more of a social mode. If you think about, the canonical company there was Facebook, being able to see and publish and share. And Web 3 is kind of a community-oriented mode where people create DAOs or people create communities that share anything from, internet access to Bored Apes. So the ability to create and share and create structured communities around content or any other passion project. So, that's going to, enabled by the blockchain in many senses, but it's really a community-based way to think about media creation or any other kind of asset creation or sharing.
Great, thank you so much. Laura, moving up the capital structure.
Sure, it was so interesting listening to Rick and Shamin talk about it, because I think there's probably a ton of overlap in terms of the trends and the areas that we're all excited about. It's just the stage at which and the maturity of the companies that we invest in looks slightly different, but we also spend a lot of time taking a step back and thinking about what are the changes happening from a consumer behavior and a content consumption perspective. And then we do a lot in marketing and advertising where we're thinking about how does that brand or that marketer, that company reach that consumer and achieve their objectives. And a lot of it goes back to the same topics that you guys were just talking about in terms of where are consumers spending time and how do we engage with and influence them in an authentic way in those channels. So content, we've done a lot in content. We're big believers in sort of premium content, and the relevance of that continues. That being said, we also don't love really hits-driven models and the uncertainty of trying to look at a business where it's really reliant on that first window of performance and not having the comfort of some underlying kind of business model or IP in the private equity business. And so what we do is we look for more scaled platforms that have existing IP, existing content that they own, that gives you sort of that underlying cash flow or that underlying security, but then the team and the engine to continue to produce that. So I think content will be an area that we continue to invest in and we're excited about, certainly on the premium side. And then other areas that we're already touched on, but that we're excited about too, include some of those newer channels where people are spending a lot of time. So podcasting, which Shamin, I know you mentioned, we have a podcast agency in our portfolio called Ad Results Media. We also used to be owners of a business that Ted manages now for KKR called RB Media, which is also in the audio space. And those are two examples of where, if you look at consumer behavior and the advent of technology really reinventing the way that you think about consuming audio storytelling and content, that you're seeing a lot of engagement in those channels, and brands are just starting to really understand better how they can use that in an authentic way to reach consumers and deliver their brand messages. So that's an example of an area that we like and we're spending time. We also look at just more broadly what changes are happening in the space, and we have an investment in a company called Bayard Advertising that we made last year. That's actually it's an agency that we think of within the marketing lens, but it's actually serving HR teams. And what they're doing is they're helping big companies go out and tell their story of why you should work at that company, and then they manage the campaigns and help attract candidates to those employers. And if you look at what's happening in the current environment with the Great Resignation and all of this turnover and everybody rethinking what it means, where and how you work, and a lot of people moving around coming out of COVID in terms of their jobs, these large enterprises that are trying to hire quickly and are trying to figure out how to really do their own storytelling to attract and retain talent, they need partners, they need companies that can help them navigate that, especially in an environment where there's things like gig economy and freelance marketplaces and all these different ways now that people can think about work. And so there's a lot of different competition. Even remote work means that you can attract people from a much bigger number of jurisdictions, but you're also competing with a lot of different companies. And we think that the HR function is 10 years behind the marketing function when you think about how data and technology are really kind of transforming how you do the sales and marketing to recruit and attract and retain talent. So that was one that we were very excited about, that was really playing on some really big trends and changes we saw in consumer behavior and in work behavior more broadly, but looking at it through what we think of as still sort of a marketing and a media lens.
That's very interesting. I'm sure their business has actually been increasing significantly right now, just because companies really need help in terms of being able to go out and recruit people.
Yes, that's right. Now in COVID, at the very beginning of COVID, there was a lot of uncertainty, and obviously people were pulling back on hiring, but you have a ton of spend now, because not only are people trying to, especially when COVID, the first reopening was happening, people were either these large companies that have retail associates or truck drivers or nurses or whatever it may be, were trying to hire in high volumes. And then they also had the challenge of trying to backfill where people were moving around and the retention issues. And then you also see some of the bigger shifts like the e-commerce acceleration in COVID. Companies like Walmart and Amazon and others are investing in all of the logistics and warehouse type workers. So there's other functions that they're scaling up very dramatically given changes in the environment. So it has been an interesting one in terms of the last 12 months have been a really interesting phase for the company as they're trying to really help their existing clients grow. And then new clients are looking around saying, we need help to figure out these challenges. And it's no longer really just an HR conversation. It's actually a C-suite topic, because it's the constraint for many companies in terms of overall growth of their business, trying to find and hire and retain talent. And so the conversation has been elevated, and it's a pain point that all of these large enterprises really are focused on more broadly across the organization. So that's been a big shift too in terms of how the conversation has evolved.
I'm sure you'll have a number of portfolio companies that will need their services.
Yes.
Okay, Ted, moving next to you. And also, by the way, I want you all to feel free to ask questions as well, because I'm sure you're all focusing on so many of the same things. So please feel free to break in and ask a question of the other panelists. Ted.
Yeah, sounds good. I'll keep it relatively short here. I think we have the luxury of not having to make 10 or 20 investments over a fund life. In my space, I have to make 3. That's over 4 or 5 years. I think we have the burden of trying not to lose money with any of them. And so in this very dynamic media and entertainment space, you got to be careful, because things are moving really, really quickly, and you can easily make a mistake. So that's pushed us to places where we feel very high conviction around the next 5 or 10 years. I think Laura hit on some of the themes that we've been following, just content creation premium. I think I just go a layer deeper on that and just say, generally speaking, if you're an owner of IP, that's a very powerful place to be right now. Whether that's buying song catalogs, which we do, and I know Shamrock does quite a bit of, whether that's owning something like the UFC, which is a creator of a ton of IP. When you think about all the different shifts in new distribution platforms, NFTs, Web3, it's unlocking more monetization opportunities for that IP. And so something like the UFC, which was historically an event-driven company and it monetized via pay-per-view. Well, all of a sudden now you've got ESPN Plus. That's a new channel for it to monetize across. They've got video games working with Electronic Arts. They now have their NFT business with Dapper Labs doing, you know, a whole new set of products, all of which can be big revenue generators. So we try to find great IP. And again, we don't have to predict the creation of new IP. We just need to find great undervalued IP. And then other areas where there might be big trends, you know, again, I'd probably go back to the connected TV model, you know, where you've got $60 billion of US ad spend a year, plus or minus. And a lot of it's been flying blind. You know, Laura commented a little bit about that earlier in the discussion. But just the advent of how much data can be used and targeted advertising, get more yield, better monetization out of that inventory, I think is a pretty powerful trend. One of our portfolio companies just bought a business called Whirl, which does connected TV infrastructure, ad serving, you know, and it's hopefully going to catch a big wave, which is now $10 or $15 billion. But I think over time will start becoming more and more of that $60 billion pie. And so, you know, those are the kinds of things that we gravitate towards and try to find the leaders in their respective spaces and, you know, ultimately, you know, back them over the long term.
So Ted, I'm going to move on to the next question with you. And also particularly given that you just bought a company focused on high school students. When you begin to think about investments, obviously, I mean, I'm the oldest person on this panel here. I failed to mention that I graduated in 1980, which is many decades ago, and from the college. But when I think about myself and people who are Gen Xers, which really have been my peer group, and then I think about the younger generation. I have a 22-year-old daughter. I have nieces and nephews. They're all quite young. The consumption patterns are so different between older generations and younger generations, and obviously media is attracted to younger audiences much, or at least advertisers and sponsors are much more attracted to younger people. How is the changing consumption patterns amongst younger people? And I say that really looking at people, both younger millennials, but then also Gen Z, and then I don't know what the next generation is after Gen Z is called. Some of you who have younger kids may know what they are. Is it Gen A or what is it, Laura?
Generation Alpha.
Oh, Alpha. Okay. So I guess, Laura, you have Generation Alpha kids. So my daughter is squarely in Gen Z. How is that impacting the way you look at certain investments, and particularly with the pressure of having to think about the changes that are happening quite rapidly? Wanted to get your thoughts and insights there.
Yeah, well, look, it's Rick commented on it. You know, it's following eyeballs engagement, and you know, if your engagement is slowly filtering out, then you know you're gonna have a problem. So finding that young audience is critical in media, and will always be critical in media. And I think it's gotten a lot harder over the years. We're investors in ByteDance, TikTok. You know, we did it at $70 billion valuation, not at zero. So it was already going when we invested. You know, we invested in Epic Games, maker of Fortnite. You know, PlayOn as an example of going after youth sports. So clearly trying to find places to capture that young audience. It's not easy, but if you do it, it's quite valuable because it is hard. And so when we thought about PlayOn, we looked at it and said, look, you know, pros have had very sophisticated technology, consumer media experiences. College caught up a little bit, but high school was way behind. But over time, all of that stuff will improve. And wouldn't it be great if you had a database of all the households and what sport they played? And when you looked at it, if you were a professional sports league, wouldn't that be really valuable to you? Or if you were ESPN Plus, wouldn't that be really valuable to you to understand that? So we absolutely think about that topic. You know, I'd say we're sober that it's not always so easy to call it, and sometimes that audience can be fickle. So you have to maybe take a little bit more risk. But if you get it right, you know, you have, you know, I think a very valuable asset in the world of media.
Shamin, what are your thoughts?
I think it depends on what you're optimizing for. I mean, if you're optimizing for eyeballs, and you know, Gen Z is really the tastemaker generation right now, and I think that particularly in terms of businesses that really give them an opportunity to demonstrate creativity, interactivity. It helps, like, it's almost like they help each other create their own longevity. And you know, you look at even something like TikTok, right? Just all the different ways, whether it's through filters or stitching or, you know, any of that. It's like they have found ways to make it, to revitalize it for themselves. But yeah, there are other really interesting media platforms as well, where if you're looking at just, you know, pure spend, you know, Gen Z is like a tastemaker culture, like I mentioned, but sometimes they're not the biggest spenders. So I think it just, you know, I think they are a category that we definitely pay attention to, but they're not the only category out there that we think is a viable investment opportunity.
Okay. And Laura, I know you guys spend a lot of time investing in the marketing space. You're trying to look at how marketing has to change to reach audiences in unique and different ways. How does the generational divide impact some of your decisions, or how does it?
Yeah, it definitely does when you think about, I mean, going back to what Ted was saying about trying to reach people where they're spending time. You know, these are generations that grew up where technology and digital was just a part of their life in a different way, and how they live and how they consume content and how they interact with each other. And so brands have to be, in an authentic way, able to step into those conversations, and there's a lot more two-way conversations happening, whereas it used to be you kind of push out a message to many. And so we spend a lot of time thinking about everything that's happening in the creator economy or the influencer channels, and you're trying to think about just the way that communication is evolving, and it's driven, you know, largely by sort of younger demographics that are really digitally savvy, and just technology's embedded in their lives in a different way. And then we also more broadly think about just, you know, what do they care about? Where are they going to spend their money as their wallet share grows and their discretionary spend grows over time? And an example of that is like, you know, the music industry. We've been long-term investors in the music industry in different ways. We just made an investment recently in a business that is really in live entertainment, as we looked at one, sort of the temporary dislocation of COVID in the music industry, and the fact you couldn't go out to a concert or a festival. And so there was this pent up demand, and there was this period of time where the industry didn't have that opportunity. But you coupled that kind of pent up demand with, for some of these younger generations in particular, just the excitement and engagement and spending on experiences, and you sort of had this perfect storm of as the world's opening up again. And then also the music industry, that's where they make a lot of their money. You know, artists want to go back on tour, they want to get in front of their fans. That's actually a big part of the economic model. And so the business we invested in actually is investing in and working with some of the smaller and mid-sized independent venues that we're bringing, you know, kind of the benefits of scale through a bigger portfolio and the talent relationships and things to help them after what's been a very tough time in COVID, but a perfect storm now. And it goes back to especially those generations and how people want to consume entertainment and have experiences with their friends and get out after a couple of tough years in COVID. And so a lot of it does come back to the behavior and the way that people want to interact, and the younger generations are driving a lot of that.
Rick, I know that you spend a lot of time with young people, including your kids, playing games.
Yes.
So please give us your perspective. And plus, you've been so involved in things that have been groundbreaking in terms of reaching younger audiences as well.
I mean, it's completely different. So I have a 7-year-old, an 11-year-old, and a 17-year-old. They all have a different experience with media. You know, they love when I watch Georgetown basketball or the Sixers, because they think like broadcast commercials are like so cool. Like they have pictures like pizza on TV. That's really cool and unique, because they never see linear broadcast advertisements. So it's a whole new different world than those of us who grew up in the last century. So thinking about that, but a lot of themes to hit on. So, you know, there's the creator economy, that younger people don't just want to consume media, they want to interact with it. It happens on things like TikTok. It happens in ways that people share or comment or add. You know, we're investors in a company called Tubular Labs, which, you know, it does a lot of nonlinear nonlinear video creation and how to track that, how to monitor that, who interacts with that content, or big influencers sharing that. What does that mean if you're Chipotle or Fox Networks? So the opportunities for monetization, as Ted said, are increasing tremendously. And I think we're just kind of following the eyeballs, for lack of a better term, or maybe ears in the podcast space, and trying to figure out, how to stay a little bit ahead of it and meet our customers where they are.
And where do you see things over the next 3 to 5 years? I mean, obviously the streaming world got upset this week with the Netflix announcement. People are getting more concerned about what the future of television is going to be. I'm about to go to NAB on Saturday, so it'll be interesting to hear what I learned there. I was just sort of curious as to your thoughts about how investors really need to think about where things are going over the next 3 to 5 years.
We tend to think longer out, but just in terms of 3 to 5 years, I mean, you're moving towards the infinite catalog. So, how that works and whether it makes sense for there to be walled gardens, and some of the takedowns on Netflix were like, how many true crime dramas could somebody, binge on during the course of a lifetime? And is that a big enough catalog? Do you have to share catalogs? I think the other thing that, it was part of the Netflix criticism was, is there only one monetization model, right? Is there only monthly subscriptions? And how does that play in different places in the world? And, is there going to be a mixed model? Is there going to be an ad-supported Netflix model? Is there going to be a couple different formats of ad-supported? Or is there going to even be a la carte? That even as we're seeing in the bundling of streaming services, kind of what's old is what's new again. And, in 2 years, are you going to have a la carte system, which might look a lot like, a 2005 cable bundle? And, are you going to pay for that through consumption of ads? You're going to pay for an a la carte basis, no different than VOD today, or are you going to pay for it in some kind of mixed model where you're seeing some ads, you're paying a little bit per month, and maybe you're pulling ahead in a different window a movie for rental or buying? So I think as you're moving towards more uncertainty, I think the models will blend a lot more.
Okay, well,
Yeah.
Ted, do you want to say something?
No, I think you're already seeing that in certain places like Webtoons, if you're familiar with that, which is really the mobile version of manga and, Japanese comics. And, that is a model that is some blend of advertising and pay as you go to, consume either early releases of content or a la carte. And, I think the evolution of these models is going to continue and start to increase. I think Rick's totally right. And maybe this Netflix announcement's the canary in the coal mine around all of that.
Well, that'll be good for Laura's investment in EDO, I would think.
Yeah, well, no, certainly you're seeing this growth in, ad-supported models, right? And obviously the Netflix announcement, or Disney being rumored to launch an ad-supported version, and just the sort of the blending, as Rick was talking about, of what may have just had one monetization model historically, maybe thinking differently about how to reach different tiers of consumers and blend different revenue streams in different ways. But I think the TV industry in particular is right at the tip of going through dramatic and tremendous change over the next few years, and it's an exciting time with everything that's happening and some of these big headlines that you're seeing, for sure.
So I'm only going to ask one last question, and so we leave a little bit of time for the panelists, but I'm going to take you all back to your 21-year-old selves, and wanted to get your thoughts on what would be some of the investment advice that you'd want to give to your 21-year-old self, and how did your time at the Hilltop actually help you get to where you are today?
Are you going to cold call someone, or do you want someone to start?
No, I'm going to let somebody I'm going to let one of you volunteer and be the first.
Yeah, I'll go ahead and start. So I think Georgetown really, I think for a lot of us, provided a framework to think and think differently as a classics major, a couple business majors, and a foreign service major. And I also have a son who's beginning to go through the college process now of, going to a place where you have a couple different models of how you learn, but, you're playing with different parts of your brain and you're learning how to learn. And you're being curious about all those different things and still establishing a growth mindset. So I think Georgetown really, encourages you to see and believe and be curious about the world, as opposed to being too pre-professional or too focused on a particular area. And I think that helps not only in investing, where you're thinking about what the future lies, but in life. And, being able to have that growth mindset has proven to not only hopefully make you a better professional, a better parent, but also a happier person. So I think that Georgetown instilled, at least in me, a lot of elements of creating a growth mindset and, the ability to think further down the line, especially as you need to think more creatively the longer your horizon is. And, we try to have the longest view in the room, and in venture, your time horizon is decades plus. So I think and I would probably also say kind of the exposure to a diverse student body of a bunch of different cultures and a bunch of different areas also kind of stimulates what you see, having grown up in a relatively small town outside of Philadelphia, and tracking with Ted back then, that it's great to be in a diverse place that encourages thinking more broadly. While I was there, I'd probably encourage myself, or my 20 or 21-year-old self, to probably to get more involved in entrepreneurship early. I think that you learn a lot by creating, and there's so many things. I guess maybe my 21-year-old self was in 2022 or 2023, where maybe students are today. There's so many opportunities to start things and be a creator, and it doesn't need to be, you don't need to start the next great company, but even if you experiment in how people are playing to earn in video games, how influencers are propagating products, and how you're doing things. I've seen friends of mine's kids, or even entrepreneurs that we work with, start a small business and start to understand by starting a business how things work. How does monetization really work if you're trying to arbitrage the creation to sell video games or widgets? How do video games really work if you're playing to earn and trying to arbitrage access to infinity coins through a network of scholars in the Philippines? And you never understand how things really work unless you're doing and you have an economic stake in it. So go create, go build, and go try things, and go learn a lot.
I really like that, and I would just add the words that popped into my head as you were talking about that, Rick, were I think Georgetown does a great job of this, and I think it's a really important tool for any investor, no matter what stage, is to foster curiosity. And so, as Rick was talking about, Georgetown gives you this broad foundation. You get to try and see a lot of different things before you have to specialize, and there's a lot of value in that from a learning and a development and a growth perspective, and also to experiment and figure out where your passions are. But I think being curious and looking around the corner and trying different things is a really important thing to foster over time. I think Georgetown really helped with that, and it's a really important thing, I think, as an investor, in terms of there's always lots of reasons to say no to things, but looking for and sort of being curious and learning, and you never know where that's going to lead. I think that's a really important part of it.
Shamin?
I mean, I mentioned this in the beginning. My time at the Hilltop has impacted my investing career by investing in the smartest people I knew during my time at the Hilltop. I would say, if you have the ability to back your smartest friends, you should, and it doesn't have to be a large check. It's like, I think people can sometimes think of investing as deploying large amounts of capital, but especially at the earliest stages and friends and family around, you have the opportunity to kind of put a little bit here and there, and you never know what it'll develop into. And I think from my experience at Georgetown, having been in the School of Foreign Service particularly, has been really valuable as a consumer investor because, you know, I have had the benefit of living anywhere from Ecuador to Spain to Peoria, Illinois. And I think consumers come in all shapes and sizes. And so being able to see varying consumer sentiment or appetites around categories, you know, whether you think about the concept of credit in certain countries, or now certain countries may not have traditional bank accounts but has huge mobile penetration, and just seeing consumer trends globally has really shaped, you know, the way we think about the emerging trends in the US, and just cognition of the fact that not everybody lives the way that you, or sees the world the way that you may.
That's great. Ted,
Totally.
last but not least.
Look, I think we've said the word community a lot, and you know, I would tell myself to invest in your communities, get to know people, understand people, take the time to develop interpersonal relationships. You know, I have plenty of science and math in my day to day, but every year that goes by, I sort of put a higher and higher premium on people, and working with the people that I care about and who I respect, and, you know, who really teach me things every day. And I think in a world where, you know, we've got algorithms driving so much of it, it's ironic, but the human part of it is becoming just that much more important. So I'd say definitely that part of it. I think that's a great and powerful part of what Georgetown gives all of us. And then in terms of just, you know, one other piece of advice, I probably would have said go buy Netflix stock in like 2006. Even today.
Even today, yeah, even today, you would still be way up. Okay, well, I know we had a great audience turnout for this evening, and I know there are a number of questions. So Rachel is going to help us right now deliver some of those questions in the remaining minutes that we have.
Absolutely. Hi, everyone. I have quite a few questions from the audience and some that came in during registration as well. So this first one here, can you speak about any differences between investing specifically in entertainment and media versus other areas or other industries?
Yeah, we do a lot across different elements of technology. I know folks do a broader range, but I would say, you know, compared to something like software as a service or any kind of metrics-driven thing, I think there's probably more art and science in media and entertainment than there is just putting math to things. I think that makes it probably a little bit more interesting, in that, you know, you have to scratch your creative itch as well as know the numbers and do the math. So I find it probably the most clearly devoted a lot of time to it. I think it's clearly the most interesting area of investing.
I totally agree. I think you have to have an appreciation for the creative element of everything. And, you know, as investors, you have a tendency sometimes to boil things down to a model on an Excel spreadsheet. But, you know, if you don't have any sense for the creative component of a lot of the areas that we cover, I don't think you'll be the best at what you do.
So to that point, we have actually another question here. How much, for everyone, how much does data collection, aggregation, and analytics go into your firm's investment decisions?
An immense amount on our end. Yeah, I mean, go for it. Yeah, go for it. Go for it.
I was just going to say, I think data is incredibly important from two aspects. I think, you know, especially at the stage at which we're investing, right? We are hungry for data to help inform our investment decisions. So we look at a lot of historical data in terms of performance and trends, and we're forward looking in terms of where that's going. And then I think increasingly there's this convergence happening. So when we talk about media and entertainment, increasingly it's data and technology businesses as well, right? Because I think that really this convergence that's happening in our industry, everything in some ways can really be now looked at as a data and technology business. And so that's an incredibly important part, I would imagine, of everything that we're all doing. And especially as you look forward and where things are going in this industry, you know, even if it's a services model, you know, often data and technology is an important part of how they're informing their product, informing their sales and marketing strategy, how they're delivering their product for consumers, and how they're ultimately kind of measuring their results at the end of the day. So I think it's incredibly important.
Yeah, and I agree. And I think, the landscape and how we can use data, what data is available, it's going to change. But whatever data we have, we're going to use. And, I always think of our firm in some ways as its own big data company. I mean, we have the benefit of a lot of people talking to a lot of people, seeing a lot of companies every day. I mean, we look at thousands and thousands of opportunities over the course of our entire platform. That creates pattern recognition. It creates the ability to benchmark. And so we try to use that as an advantage where we can.
Great. I have another question here. And Rick, you kind of touched on this a little bit, but for everyone seeing so many ideas and companies on a daily basis, have you ever thought about starting your own company or pursuing an idea that you maybe haven't seen but know would be marketable?
So I did start a company, and it was great. It was a great experience. I think helped a lot being on the entrepreneurial side to being in venture capital. So that's a great experience. And obviously, as you get older, the risks go up for starting a company. Your opportunity costs are greater, and you're probably your cost of your life increases also, which increases the opportunity cost. So I'd encourage, if folks are thinking about starting a company, especially if you're at Georgetown or a young alumni, you should go do it. I know it feels like a big risk at the time, but it's not as big of a risk as not doing it. And I think it's an incredible experience that you'll have with you for the rest of your life.
Yeah, and I come from a family of entrepreneurs, so that's like the best thing for me, at least. And if I haven't started my own company at this point, I get to work every day with a lot of people who have, and I get an immense amount of joy out of that and appreciation for that. So absolutely something that's a big part of my life.
Great. So we have just a couple minutes left, but I want to end with this question, and I'm hoping to get an answer from everyone. What's one characteristic or one skill that you think a young professional entering this space has to have to succeed?
I think a thick skin. And I mean, there's a lot of rejection early on. And I think I think that it's really helpful to take input in terms of refining and view. And, a lot of people talked earlier about curiosity is a really important skill. It's like taking someone's pushback as a data point and being curious about how to solve around it, as opposed to taking it as a rejection and just giving up. A founder's journey has a ton of highs and lows, and especially, at our stage at pre-seed, which your mortality rate is the highest, you really have to see past, the peaks and the valleys.
Yeah, I would probably agree. The curiosity is so important, and it's an incredible gift. And even if you read the biographies of non-entrepreneurs like Da Vinci and Einstein, curiosity is the key to having kind of that growth mindset and continuing to grow through your life. But I think at the earliest stages, I think Shamin said it well, of very low fear of failure. You don't want to fail for all the obvious reasons that are out there, but understanding that failure is an acceptable option, and you're making a risk-adjusted bet against that. And fortunately, we're writing much smaller checks than TED, so it's an acceptable thing to lose all your money, and being able to understand asymmetric returns. And I've written a lot of checks and I've lost a lot of money and I've hated every cent of it. But understanding that that's a learning experience, and if you're not taking risk-adjusted asymmetric bets, you're doing it wrong.
I was just going to add passion. So I think the curiosity point that we've all touched on, and then just passion around the sectors that we invest in, because there is so much change and there's lots of different ways that you can be looking at investing opportunities. And I think the difference when everyone's working hard and running at different opportunities is that you have passion around what you're doing in the sectors that you're playing in. And so you're having fun while you're doing it. And you are also continuing to want to learn and push yourself in ways where it's not just, it's not just a job where you're clocking in, you're actually enjoying it, and you're doing it for fun, and you're enjoying where things are going. And so I think just finding an area, whether it's media entertainment or something else, that you have a lot of passion and interest in, and being able to marry that with what you do every day.
I agree.
Anything else, Ted?
No, I think it's been well said.
Okay, that's great. Well, I couldn't have imagined a better and more robust panel than the four of you. You all provided so many great insights to our audience tonight, and I wish you all continued success in your many interesting endeavors and great returns on your portfolios. And look forward to talking to you all soon. Take care now. Thank you, everybody.
Thank you, everybody.
Thank you, everybody.
Um, yeah.
Bye.
Bye-bye.